You may have heard about scam crypto projects rug pulling their investors. But how do rug pulls in crypto work? And how do you protect yourself from them? In a nutshell, rug pulls are a type of exit scam that involves scammers luring in the public to buy into a token or a project, then pulling the rug out from under the investors and disappearing with their funds. Rug pulls can take many forms. Liquidity pools are a classic rug pull scenario, which relies on decentralized exchanges to execute. A malicious developer first creates a new token. To make it tradable on a DEX, they will deposit a certain sum of this token together with a widely adopted crypto like ETH into a liquidity pool, meaning others who buy the token will be trading it for ETH, which goes into the pool. The scammer will hype the new token up to attract buyers and bring up its value. Once the token reaches a high enough value, they then remove all the ETH from the liquidity pool, which prevents further trading of the token, collapsing its price. Alternatively, scammers could just accumulate a large share of the token supply and then sell their holdings all at once after successfully enticing enough buyers to pump the token's value. These are sometimes also referred to as pump and dump schemes rather than rug pulls, but it's worth mentioning here since the outcome is the same, with investors getting the short end of the stick. Next, a smart contract rug pull is when a malicious developer intentionally includes smart contract vulnerabilities to defraud investors. It could be a backdoor or a switch that allows them to make a token impossible for users to sell, mint unlimited tokens for themselves, or charge ridiculous amounts of trading fees. A notable example of this is the Netflix series-inspired Squid Game token, which was programmed to prevent selling. It successfully lured in investors and had its price skyrocket from a couple of cents to over $3,000 at its peak before developers pulled the rug. Its price fell to zero in an instant, taking away over $3 million from its victims. Scammers can also create and market a fraudulent platform that pulls in deposits from investors. Then they disappear with the assets and leave depositors with worthless tokens. A past example of a fake project is the infamous BitConnect in 2017, which promised investors a high-yield lending program that gave its investors 1% return every day in the form of BCC tokens. However, BitConnect turned out to be a Ponzi scheme, which relied on new investors to pay earlier investors. The project's token value crashed by 92% when BitConnect abruptly shut down in 2018, leaving investors with significant losses. There are also less obvious and dramatic soft rug pulls where founders quietly abandon a project, leaving their communities in anticipation of developments that never come. To identify and avoid rug pulls, it goes without saying that you should always investigate the project's team and learn about its goals. Be wary of anonymous teams and lack of transparency. Besides that, review if a project has security audit reports. Although a crypto project without a third-party audit isn't automatically a scam, it doesn't hurt to be extra cautious and do more research about the project before investing. Another aspect is checking if a token's liquidity is locked, which prevents project owners from withdrawing assets from its liquidity pool and collapsing the token's value. You should also analyze a token's holder distribution. If a few wallets hold large percentages of its supply, there's a high risk of price manipulation and large holders dumping the tokens. You can easily check a token's liquidity and holder analysis using tools like RugCheck for Solana tokens and Token Sniffer for tokens on Ethereum. So whenever buying into a new project or token, and especially meme coins, it's best to assume that you will get rug pulled as a worst-case scenario and manage your risk accordingly. Don't invest more than you can afford to lose in any one crypto project. Well, if this video has helped you learn about rug pulls, leave a like, and be sure to check out our video on wash trading to avoid tokens with fake trading volume.